Welcome to SF Commercial Property Conversations with Bruce Bean, where Bay Area investments meet expert insights. Get ready to unlock the strategies of commercial real estate success.
Today we have Sam Louwrens from Reading, and Sam is in the construction insurance business. So Sam, it's great to have you, and I just love the fact that you came from Cody, Wyoming. So I'd love to hear kind of your origin story of how you got from Cody to Reading into commercial construction insurance. So great to have you.
Thanks, Bruce. Yeah, Cody, it's a small town. It's a nice town. But my dad was a doctor. He was in general medicine. He didn't have a specialty, and there was just more work up where I am now, which is Redding, California. So we moved over simply for that reason. And from there, I was homeschooled by my parents all the way to university. And, I didn't ever really know what I wanted to do with my career. Nothing really jumped out at me. For a while, I was going to be an engineer. Everyone was pushing me to mechanical engineering. And I enjoyed that simply because of the math. Weirdly, I loved math in school, but then at job fairs and just introduction from my parents, every time I met a mechanical engineer, I was like, this is not for me. It was purely a personality thing. Maybe I didn't have a great sample, because now I have friends who are, they call themselves gearheads, I guess, but I have friends in mechanical engineering. They're fantastic. So, maybe it was the Lord or something, but I didn't end up going down that path. And when I got out of college, I just called someone. It was a homeschool tutor of mine from, this would have been junior year, I believe. Someone was tutoring at a homeschool co-op, and I knew that he was in a finance-related industry, but I didn't know what. And I just called him. I said, "Hey, can you get me a job?" Turns out he was a commercial insurance broker, and that's what I'm doing now.
So wait a minute, you started in insurance as a junior in high school?
No. I called him right when I got out of university. Yeah.
Okay, I got you. All right. Well, I want to step back for a minute here, because I have friends that do homeschooling, and I don't think people really understand the network that's involved with homeschooling and how it all works. So maybe you could just give us a little preview of how that all goes together.
Yeah, well, there's a lot of different models for how you can do it. I think most people have this caricature in their mind that it's completely unsupervised, that you don't have to do any tests, that no one knows what's going on, and the parents are, indoctrinating the kids or whatever. But yeah, when I did it, I was in a variety of co-ops. They call them homeschool co-ops. There were a lot of sort of tutoring programs that would do different things. I went to this online school called Wilson Hill Academy, I believe it was.
Oh, wow.
And they had me reading Beowulf, Nika McKeon ethics, Aristotle, Plato. It was very cool. But at the end of the day, what's nice about homeschool is you can really tailor your child's education. And that's what my mom wanted me to do. She wanted me to read classical literature and, dig into these texts at a deeper level than you would in a public or private school environment. And then what was nice on top of that is you can do dual enrollment. So during high school, instead of just doing homeschool classes, I went to the local community college, and I knocked out all of my gen ed. So when I made it to university, I only had to take the classes that were specific to my degree, which was finance, and I didn't have to retake anything that would be considered, your general education for transferring.
Well, so was that a bit of a shock to go from homeschooling into the local community college?
In some ways. I mean, I liked the community college system. I liked meeting the kind of people there. There's kind of this optimistic, hopeful class of 30 to 40-year-old people who are trying to turn their life around that, I don't know, they're really cool. You get to talk to people who've made mistakes, and are working on turning things around. And then you meet a bunch of like, people who are just out of high school who have no idea what's going on.
They got no clue, so they're in the community college trying to figure it out.
Exactly. Yeah.
Well, so this is like Reading Community College. What's the community college there?
The one I went to is Shasta College.
Oh, okay.
Yeah.
All right.
They have some quality teachers, professors, whatnot, but it's a generic community college experience.
Oh, no, I mean, the community college groups around here in San Mateo are fantastic. I've been involved in several levels of that, and it's a great system. I mean, for people that can't afford to go to a university and pay $9 jillion, a year, this is a fantastic system. And now, apparently, you can actually get a 4-year degree in some of the community colleges. But anyway, great system. Okay, so you jump from, actually you went online and you graduated from university in a year and a half. You did 4 years in a year and a half online.
Yep.
From Lynchburg, from Liberty University.
Yeah, so a friend of mine was going to Liberty University, and apparently they were nationally known for their online programs. This is pre-COVID. They had it all figured out. So I signed up with them. I figured, all right, I'll stay in Reading. I'll knock out my finance degree. And it was an awesome experience. Yeah, I took the maximum credit hours that I could every semester. And since I had already finished the general education before, I was able to get it done in a year and a half.
Oh, that's interesting. I didn't realize that they had a max. Like, okay, wait, you can only take what, 20 hours, or what was the max?
I don't remember exactly what the max was. I think what they let me do was 18 credit hours a semester.
So you just went kind of full blast and got that all done.
Yeah, well, I was trying to be an engineer beforehand, so the schooling was easy. Moving from doing higher end calculus, your differential equations, multivariable calculus, into simple finance math, like your basic accounting courses, real estate. It was not hard. It was very easy.
Mostly kind of spreadsheets and adding and subtracting, and not too much other than that.
Exactly. Yeah.
That's fantastic. All right. So then we get to the point where all of a sudden you go back to this person and you go to work in the insurance business. And what happened there?
Yeah. So I didn't even know what he was doing. I just knew it was in finance. He's well off. He's got a nice house. He's got a large family. I'm like, that's where I want to be when I'm his age. So I gave him a call. He told me to swing by his office. And to be honest, at first I was like, this is, what am I doing? Because it really seemed like a very sales oriented career. I mean, the way you get paid is, in most insurance broker jobs, is a very small salary with mostly commission. And so anyways, I jumped right into it, and 3 years later, I got to say, I love it. It's a strange industry, but I do love it.
Okay. So that's good. You're 3 years into it at this point, and you're moving and grooving at this point, and it's mostly sales. But I guess the big question I have, you're in construction insurance. So where's your territory? Is it everywhere, or what's your area that you work on?
So I wouldn't say it's all sales. I think that would be my perspective when I started, just because you have to build the book. And the easy way to do that for me was to call small contractors and try to save them money on their rates and whatnot. And that works. But as you sort of develop in it, you realize that, if you want to work with larger companies and larger businesses, you have to get creative. And so my approach now is more, I come from a strategic advisory angle. We invested a lot into coaching and strategy, and we learned there are some ways you can help people save money on their programs that don't involve just quoting them. on the outset. So I'll go in, give someone some free advice, some consulting on how they handle their insurance negotiation. They'll save money, and then sometimes I'll get hired after that once the advice pans out. So that's sort of how it's evolved over time. But definitely at the beginning, it was just breakneck cold calling every day, 100 dials.
Oh, 100 dials. Okay, that was my next question. So is this mostly people in Redding or around Redding?
Right. So as of now, I am a California and Texas broker. I'm licensed in California and Texas, and those are where all of my clients are. How I sort of approach it, I get calls from all over the country. People get referred to me out of Illinois and Michigan specifically. I don't know why. But yeah, those two very big areas where I get inbound leads. And if they are worth getting licensed there, then I will, but that hasn't happened yet.
Okay.
That's kind of how I'm approaching it.
So you do have to be licensed in Illinois or Michigan to actually write a policy there.
Exactly. Yeah. But I have friends who are licensed everywhere. So with those people, I still have someone solid to refer them to.
Yeah. Well, so to get licensed in, say, Illinois, you have to pass some sort of insurance test?
Yeah. Well, California has the strictest insurance test. So how it really works for me, if I want to get licensed anywhere else, I just have to buy their license. There's no additional education credits that I could take. I've already taken the max.
Interesting. So how much does it cost to get a license in Illinois or Michigan?
That varies widely. I couldn't tell you. Yeah, it's state to state.
Yeah. Okay.
And that's not how it works for most brokers. I have some freedom there where my agency owner is pretty open to breaking out into new territory as long as we're committed to actually learning that territory, and because there are geographical considerations, and so it has to be worth it. Most people are not that flexible.
So why Texas? Why'd you go to Texas?
The way I look at Texas, I think it's a blooming part of the economy, especially for construction. I think there's a lot of development going on around there. And so when I actually met at first a small business out of Texas, and they asked me some questions about insurance. I gave them some really solid advice. I got licensed. They hired me to run their program, and then referrals started streaming in. Now I have some pretty decent sized clients down there. But it was it's a long-term play. It's like, if I want to move out of California at any point, probably would end up in Texas, just because I think the construction industry is in a very solid spot.
Well, okay. So that brings us to the obvious question: is construction is currently down now in California.
Mm-hmm.
And so how's the market in Texas?
As far as insurance goes, or the
construction insurance. Well, it sounds like you regardless of whether projects are going on, you're insuring construction companies.
Yes.
So just for a minute, let's step back. So do you actually get paid when you give advice to a certain group?
I wish.
Yeah.
So people have been telling me I've been doing this new thing where I go in and I give people, I don't know what to call it, sort of a playbook for how they can strategically negotiate their program. And I do it for free. And every single time I've done it, I've been told, "Can I pay you for this?" at the end of the call. And I'm thinking, I don't know how I would market that or monetize it. But the way I look at it, I'm like, just refer me some friends. Refer me some friends. Yeah. Use this advice if you can, and we'll see what happens.
Well, being in the commercial real estate world, I understand completely. You spend a lot of time giving advice, and sometimes it pays and sometimes it doesn't. So,
right.
You kind of have to go with what's going to work. And eventually, I'm sure, given your personality and personable kind of outfit, you get referrals out of it regardless.
Oh, I've gotten some very, very solid referrals. Yeah. So it's working out for me.
Yeah, no. So and besides, the payment you'd get for advice probably wouldn't add up to enough to really make too much difference.
No. Although if I were to do like someone told me I should do a webinar, I've been thinking about that. That might be worthwhile if I could get multiple people on one call, because typically when I meet with people, I can customize a strategy for them. A lot of people, it looks different how you can really make the most out of it. But there are general pieces of advice that would matter to everyone in construction that most people are missing. And that kind of stuff I could probably package. I could package for everyone, maybe per class code. Like if I were to do a course for roofers or something.
Yeah. Well, we're going to have to talk. I think there's definitely some information that could come out. Maybe we'll do some webinars ourselves here and get them out to the public for you and see what happens.
There you go.
Yeah. Yeah. No, that sounds great. So you've been at it 3 years now. You're chugging along. You've got your book of business going. Are you still making cold calls?
Yes, although I need to be making more. Yeah, so with everything I've been doing, my calendar has been full, and it's just there's a lot of people that'll waste your time. So I'm kind of like figuring out I need to find a better way to use my time to do some outreach, get in front of the people I want to get in front of, because the kind of inbound leads you get in insurance, people will call you who are in a tight spot, but sometimes they're not in a tight spot. They're just very price sensitive. So for instance, just the other day, I walk out of a meeting with a company that is paying $1 million in insurance across their portfolio. It's an excavating company, and they're sort of an ideal client for me. And then as I'm walking out of that meeting, I get a call, and I don't recognize the number. I pick up, and it's someone who's paying $4,000 in insurance, and their neighbor told them that they could be paying $2,000. They're like, oh, tree trimming businesses should be paying $2,000 in insurance, not $4,000. And so they're like, we're being drastically overcharged. Can you help me? And I'm just,
You're like, no, I don't really have time for this. It's not going to pay me anything. Yeah.
I booked them for a short
that's good.
30-minute call on Friday. I'm not going to sell them insurance, but I'm going to give them some advice just to help them out, because I felt bad.
Well, that's good. I mean, I know the drill all too well. You got to do certain things, and you never know. Maybe the tree trimmer will refer somebody good to you. You got to kind of just play the odds a little bit.
Yeah.
So did you get the policy with the excavation company?
That's a very funny account. They have always been my dream client. They're always doing projects around Reading. They're one of the largest general contractors here. And I got in touch with them about 2 or 3 years ago, and they said they're very happy with their broker, happy where they're at. Mm-hmm. And then this year, they actually reached out to me saying their broker was retiring, and they wanted to just have a chat to see what I could do. So I went in and I gave them sort of a playbook. They told me they were very impressed. They wanted to move forward. And then their broker just told them he's staying in the business for one more year. Yeah. So I'm like, all right. But they told me, hey, we'll send you our policies, and then let's get moving next year. So about as warm of a lead as you can get, and I'm not disappointed, because they were very friendly. It was nice to finally sit down. I've been thinking about how they can lower their insurance costs for a long time.
Oh, that's good. So you've been working this idea for a while now.
Yeah. So, well, they're what you would consider a best-in-class kind of construction business. They have a very low X mod, which, if you're familiar, that's kind of it's a number that's assigned by California's Work Comp Insurance Board that basically correlates to how well your safety profile is in terms of like your claims. So if you have a 1 X mod, you're paying, there's no credit or debit in terms of your insurance rates. You're getting exactly what the company is going to pay you depending on how competitive they are. But if you have a 0.80, your rates are going to get a 20% discount no matter what carrier you're on. And if you have a 120, you're going to get a 20% extra charge on top. So there's a big incentive to keep your XMOD down. This company had like a 76, I want to say, which is phenomenal.
Oh, yeah.
Very good. So
wow.
I happen to know that they have a very interesting, they have a fleet management system that they developed in-house for keeping track of their equipment, maintenance, checkups, safety, etc. And they've developed it, and I know the guy who developed it for them. And I couldn't help but think this is something that you could include on your auto submissions and your equipment submissions to stand out a little further. Any construction company that's doing stuff out of the box like that, it's a very clever way to make yourself stand out on a submission. Underwriters view hundreds of submissions every month. A lot of them are generic. You would not believe how bad most brokers' work product is when it comes to submitting for insurance quotes. And this goes for every business, by the way. I work with construction specifically, but for commercial property too, there are ways to do this. You want to make sure your submission includes at least a cover letter on top that explains everything that makes you unique, your philosophy, your work culture, your unique safety controls. Anything out of the box that you're doing will potentially move the needle. I mean, underwriters have an unbelievable amount of subjective underwriting credit that they can put on any quote. I mean,
wow.
It ranges typically from 25 to 40% that they can just discount any submission that's given to them. How you get that submission isn't based necessarily on how much premium you're bringing to the table. It's based on how you handle the negotiation or how your broker handles it.
So how many underwriters do you have in your group, so to speak?
Yeah, good question. So this is the dirty little secret in commercial insurance.
Okay.
Everybody has the same carriers.
Really?
Anyone who's worth their weight for most classes of business. Now, if you're in towing, for instance, some carriers are very exclusive in who they'll give appointments to, and then it's not true. But in construction and commercial real estate, everybody's got the same carriers. There's a wholesaler. In the insurance distribution channel, there is a layer called wholesaler where they're basically brokers for brokers.
Okay.
They get all the appointments. So carriers only want to give appointments to people who can bring them volume of premium. So the wholesalers bring the volume, and then they just give out appointments to everybody. It's extremely easy to get appointed with them. And if you do that as an independent shop, you can be small and lean, but you can have access to all of the best programs in any given class. So every time you get a call from a broker that's like, hey, I can save you 15 to 20% on your insurance, chances are they're going to show you a quote that your agent could have shown you.
Well, I heard from one insurance broker that if you start applying from, different insurance brokers, that the underwriters kind of dismiss you. Like, they're just shopping around, so I'm not going to screw around with this.
First question they ask, do you control the account?
Ah.
Yep.
Interesting. And how do you control the account?
If you want to win the insurance game, you have to know how the underwriter thinks, and you have to create a strategy that caters to that. Underwriters don't have time to mess with people who aren't serious. When they get a submission and they're looking at it, and then they realize they've seen this submission from 4 other people, and not only that, but every year for the last 6 years, do you think they're going to give you any of those subjective underwriting?
They toss that one out right away.
Right into the trash. And most people in construction, that is the generic strategy, is shop it with multiple brokers, get multiple bids, and they're shooting themselves in the foot every single time.
So they end up probably renewing with their existing carrier because they're the only person that'll look at them.
Yeah. No, actually, that happens all the time. And that existing carrier, by the way, they could probably get a more competitive rate from the carrier that they're on.
Right.
Because you didn't make the underwriter work for it. I mean.
Yeah. Our existing carrier is like, screw it, I'm just going to send them the same old quote because they're bidding this out to everybody and anybody.
When the analogy I've always heard is that shopping with multiple brokers, getting multiple quotes sent to the same carrier, it's like multiple pings on your credit card.
Oh, yeah,
Yeah,
okay. Right. Your credit's going to end up going down because of it.
exactly.
So, just for education purposes, how does an insurance broker get paid?
Commission, typically. Yeah.
Yeah.
So, I mean, it depends on who you're talking to. I mean, how I get paid, my position, it could be base salary plus commission, but the actual driving revenue of every business is commission. And a lot of people think, okay, if we cut out this, can't we cut out this middleman layer and then lower
Right.
our premiums? What they're not realizing is that carriers are actually, they would have to pay way more for customer service roles that handle the broker, what the broker brings to the table than what they pay out in commission. So they're saving money by doing this. They pay very little in advertising, a lot of these commercial programs, and then almost nothing in customer service. I mean, look how much money they're putting into just managing claims.
Oh yeah. Yeah, that's the big ticket for sure. They don't want to screw around with the sales side of it and customer service. So
they leave that to us to figure out.
So, but in terms of your commission, correct me if I'm wrong, you get paid a certain amount the first year, and then you kind of get an annuity for every year that it's renewed?
Yeah, so the firm, in terms of what the agent makes, it's typically 12% across the whole portfolio. So you might make like 10 on the workers' comp and 15 for general liability. Those are very industry standard numbers. Sometimes brokers will make as high as 20%, which I've always thought is a bit obscene.
Yes.
In fact, I've seen, and you should always request, by the way, just it's good to know what your broker is making on your program, because you might be able to identify a misaligned incentive there. The most expensive carrier in California is State Fund. I met a very large construction company here. They're now a client, and we reviewed their State Fund policy, and right there on the top corner, you could see the broker was walking away with 20%. Do you know what State Fund gives us? 6.
Oh, oh wow.
We make 6% for putting people with the worst carrier, which we think is fair. We don't want to stick people on the carrier of last resort. That other company has a very large book of business with State Fund. And do you think they have an incentive to move them?
Right. No way. Yeah. So they're just going to stay with the 20% for sure.
Oh, absolutely. Yeah.
Yeah. So is that year to year 20% or 12% or 10%?
So a producer will typically make some different amount. The first year they sign it, they'll make more commission, and then every year after they'll get a lower percent of the renewal. Yeah. I get the same amount every single year because I also handle all my servicing. When I talk to my clients, they're given my cell phone number. They can call me 24/7. I handle their certificates, any coverage questions, their endorsements, their renewals. And so, I think that I like how that works out. And I think people appreciate being able to have that personal touch.
Oh, yeah. I mean, I'd love to be able to call one person and say, hey, get me this certificate. And I suspect you pop it out in one day or whatever.
Yeah, I used to brag about getting them done in under an hour. But then I realized I was spending all of my time doing certificates. So now it's after 2 p.m. 2 p.m. every day. I'm typing up certificates for clients. Yeah.
So are you using some sort of CRM, customer relationship manager? What do you do?
We're a little bit between systems right now. We have used Pipedrive historically, and some other combination of programs. And right now we're kind of looking at overhauling everything. There's a lot of really cool tools that are coming out, especially with AI, for CRMs and AMSs. That's an agency management software that are brand new and able to cut out a lot of expenses that normally would be taken on in terms of like hiring account managers and customer support reps. yeah, the whole landscape is changing for insurance. Those roles are becoming are dying out quick.
So I'm not familiar with Pep Drive. Is that specific to the insurance business?
No, it's mostly a sales CRM that we're kind of abusing to make work for our purposes. Yeah, there's a reason why we're looking into other solutions.
I see. I gotcha. All right. Well, in that case, where would people get a hold of you, Sam?
I think my my number or my email would probably be the best start. So Sam at JeffersonFinancialINS.com. That's my email address, and then my cell number I'll give out here. Hopefully I don't regret this. 530-215-9628.
That's fantastic. Well, for those of you out there that need construction insurance, call Sam.
Yeah, I'm your guy.
All right. That's what I like to hear. Well, great to talk to you.
Perfect. Thanks, Bruce.
Talk to you soon.
That's a wrap on today's journey through the SF commercial real estate scene. Ready to share your story? Visit sfcommercialconversations.com/guest. Your insights could lead the next conversation.